Some people think you need a huge deposit to buy a house. Others think you can get away with the bare minimum. Both are wrong. Your deposit isn't just about getting approved and getting on the ladder. It's actually what controls the mortgage deal that you're going to secure. Yes, that's right. The deposit you invest into the property is exactly what determines the interest rate you get from the bank. Now, in this video, I'm not only going to show you how much you need as a deposit in the UK, but show you 4 different tiers of deposits that can help not only your short-term planning, but long-term equity within your property. So the question people are asking is, what's the minimum I can buy a property with, right? What is the entry level? The entry level for a lot of mortgages nowadays is 5% deposit, which means if you're buying a house for £200,000, it's £10,000, £300,000 is £15,000, and £400,000 is £20,000. But here's where most people misunderstand deposits completely when buying a house in the UK. 5% you get on the ladder, but what this creates is higher monthly payments because you're borrowing more money because you're putting less deposit into the property, higher interest rates because it's more risky for a bank to lend at a higher loan to value, lower deposit, it's basically the opposites, and potentially fewer lender options. Now, you're going to have fewer lender options because of a couple of different reasons. The first point being is the credit score thresholds. Now, because it's the riskiest deal for a bank to do, going up to 95% loan to value, which is also a 5% deposit, it is also the hardest one to attain. So if you haven't got a really great credit score, or if you've got any blips on your credit file, it's going to be extremely hard to secure a 95% mortgage, therefore limiting your options to certain lenders that may or may not accept your credit scoring. And the other factor that we need to consider when limiting your options here with a 5% deposit is the affordability. Now, if you're looking at properties at the top of your affordability and you're potentially looking at only lenders that can offer 6 or 5.5 times your income, and again, we're really stretching it because we're only looking to put 5% deposit in, then potentially you are removing some of the cheaper lenders who could offer you the property if you were committing more of a deposit, i.e. borrowing less money. At a 10% deposit, things do start to shift in your favour. You are now going to see better interest rates than you are being offered with a 5% deposit. You're potentially opening the doors to more lenders coming in because the stress rate on the credit scoring is less harsh. Affordability is also going to be looking a little bit nicer because you're putting more money into the property. It's less risky, and you're potentially opening up the doors to a few different options which could potentially be cheaper than the alternative options when compared to a 5% deposit. And this is also going to result in lower monthly costs. Now, this is going to be in 2 different ways, not only because your interest rate should be lower, because you're going for a lower loan to value, higher deposit mortgage deal, which means you're paying less interest on the whole amount that you're borrowing, but also because if you're committing more of a deposit forward, then you're borrowing less money anyway. So it's kind of a win-win scenario. Now, a 15% deposit is the next threshold, and this is really where you start entering into sort of a higher equity first-time buyer mortgage where you are benefiting from even lower interest rates, stronger affordability assessments, and a way better long-term position. Because the hardest part about being a first-time buyer is you're barely building any equity for the first few years. A lot of people are committing to really high mortgage terms because their interest rate is super high. At 15%, you're going to be getting substantially better interest rates against a 5% deposit. Because you're paying less in interest, I'm hoping what that means for you is you're committing more towards the capital. And if you're committing more towards the capital from the start, you're really setting yourself up for long-term success in the property, and you're no longer thinking about just the short term. So it's a massive advantage if you have the money available. And looking at a 20% deposit as a first-time buyer, we're now in the premium tier. Is it necessary? No. Are you unlocking some of the best deals available on the market for first-time buyers? Yes, absolutely you are. If you've managed to save this deposit for a property that is the right price range for your medium to long-term plans, you have put yourself in the best possible position for long-term success because you are getting substantially better interest rates, a lot lower monthly payments, especially towards interest. I'd actually recommend that you reduce that term as much as you can to clear the mortgage as fast as possible, because again, not only are you paying less interest right now, you're going to be paying less interest for less time, because hopefully you've cleared that mortgage a few years quicker than if you'd committed less of a deposit. But also at 20% deposit, you are opening the doors to so many lenders, because the risk is a lot lower for a lender. So you should be passing the credit score if you've got properly managed credit and you've never had any credit problems in the past. You've increased your potential affordability because you're committing more money towards the actual house purchase, which means if you pair a higher deposit with the same amount a bank can potentially give you, that means that you can actually go and buy a bigger house, potentially increasing the time that you're going to be spending in that house, potentially increasing the equity you've built over the medium term. So it's a win, 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 win. So the question isn't what's the minimum deposit I can get away with. The question is, how much leverage do you want when you buy your home? But it's really, really important to understand that this doesn't mean you have to wait to save more money. Because if house prices continue to rise while you're attempting to save a higher deposit, you're almost continually chasing after that target goal of a certain percentage. And if this takes a long time and you end up waiting long enough, this could actually put you in a worse position. So don't think getting on the ladder is a bad thing to do, because a 5% deposit gets you on the ladder. I'd much rather you understand the value of increasing your equity over time than just the deposit itself. But understanding the difference between putting 5%, 10% or 15% deposit in is also really, really important, because some people have the money but don't know how much to commit to the house purchase. And it's really, really important to understand that your deposit isn't your only cost. So you're looking at a bank account or multiple bank accounts, depending on how you're managing it. You want to total the amount up, look at the potential purchase price you're looking for, and then factor in other costs as well. Solicitor fees can cost anywhere up to sort of £2,000–2,500, depending on the quality and the area you're in. Private survey fees can also add up another £500–600. Moving costs, believe it or not, can be another £500–600, depending on who you go for. I'd certainly look at potentially hiring a van and doing it yourself. But if you aren't able to do that, or you don't have the time to do that, getting professional movers that have insurance to move items from one house to another is extremely important, but it's expensive. You need to consider potential advice fees from a mortgage advisor. Again, a lot of these pay for themselves because they're getting you hopefully better terms on the right mortgages available for yourself, but hopefully helping you get the right price on the right property, and also making that process a lot easier to understand. So if you understand that your deposit isn't your only cost, you're going to go into this situation way more prepared than 99% of other people that are looking to buy a house. And if you're more prepared, you're going to get the most out of it. And if you're going to get the most out of it, you're winning from buying your first home. Now, my final point here, the best deposit isn't the biggest or the smallest. It's the one that puts you in the strongest position possible. I always say, keep money aside for the additional costs. Make sure that that's covered. Commit what feels right and what mathematically works out right and financially works out right for you at this given moment. But also leave enough aside to actually furnish your property. I don't want you to buy a home that's empty for the next year. I want you to buy a home that you can furnish and actually turn into a home. Because it's not going to be a home, it's going to be a property. And you living there, furnishing it, is what actually makes it into a home. So that's super, super important to recognize. And only you can really understand how much you're going to spend on furniture. I've seen people do it for as little as £500 all the way up to £50,000. So again, that is your own choice. And if you want to understand what deposit makes perfect sense for you, go into the video description, click on that link where you can book in a call, find a time that works best for yourself, book it in, we can go through your situation together, work out what deposit's right for you, when it's right for you, and how you can appropriately plan. And I can be there every step of the way, making sure that you are successful when buying your first home. Now, I want you to click on the video on your screen right now, because it shows you 7 common mistakes that I see almost every single day that first-time buyers make. And if you avoid them, you're going to put yourself in a way better position, potentially saving you time, money, and preventing the whole purchase from collapsing. Enjoy the video, and I hope to speak to you very, very soon.